Nvidia on Wednesday forecast third quarter revenue of $54 billion, plus or minus 2%, comfortably above analysts' estimates of $53.14 billion. The outlook underscores continued robust demand for its advanced AI processors, which power the generative AI race across industries. But the company's second quarter results revealed cracks in its momentum. Nvidia reported revenue of $46.74 billion, slightly above forecasts of $46.06 billion. Still, some analysts flagged weakness in the all-important data center business, where revenue came in a touch below expectations at around $41 billion. Roughly half of that came from major cloud service providers, including the likes of Microsoft and Meta, which continue to spend heavily on AI infrastructure. Investors, however, were not impressed. Shares dropped 2.6% in extended trading, wiping out more than $110 billion in market value, a loss larger than the entire market capitalization of rival Intel. The sell-off reflects rising concerns over China, one of Nvidia's largest markets. The company confirmed it has assumed no shipments of its H20 chips to China in its latest outlook. Those chips had been hit by U.S. export restrictions, part of Washington's escalating technology battle with Beijing. The Biden administration, now reinforced by a deal under President Donald Trump, has demanded a 15% commission on certain U.S. chip sales to China. Nvidia agreed in exchange for a partial lifting of restrictions. But sources say Beijing has discouraged local firms from purchasing the chips, forcing Nvidia to halt H20 production. Nvidia had earlier warned that the U.S. curbs could shave as much as $8 billion from its July quarter sales. And while demand elsewhere remains red-hot, the uncertainty over China is clouding the company's long-term growth story. Still, enthusiasm for Nvidia has fueled one of the biggest stock market rallies in history. The company's chips remain the essential hardware for generative AI, with businesses worldwide racing to adopt the technology. Analysts say Wall Street's obsession with AI, often described as a modern-day picks and shovels trade, has been the dominant force behind the S&P 500 surge over the past 2 years. For now, Nvidia remains at the center of that boom. But Wednesday's results show that even the world's most powerful AI chipmaker is not immune to geopolitical risks, cautious spending, and investor fatigue.